Perfect. It's recording. So tonight we have Miss Anastasia Tacewicz of Movement Mortgage, and she is phenomenal. I've been working with Anastasia for the past 7 years, I want to say.
Like 10.
A long time. But
Yeah.
she's been a loan officer for the past 16 years. So she has a lot of experience. She's run the gamut of all buyer situations, we'll say that way. She's very experienced in this, and she understands this loan product. And I see a lot of people kind of searching the internet. They're hearing bits and pieces about it. And I figured it makes sense to actually hear from a lender, because they're going to be the ones that run your finances and kind of pick through everything with a fine-tooth comb. It makes more sense to hear from them what they're looking for, how you qualify for this program, and how to move to the next step, because it's up to $50,000. That's a lot of money, and I don't want anyone to miss out on that opportunity. So that's why we're having this presentation here tonight. A little bit of house rules. Please keep your mic on mute and be respectful of everyone's time and effort. If you have your video on, please kindly turn that off, because sometimes people are moving around and it can be a little bit distracting. If you have any questions, please feel free to put them in the chat. I will get to every question that you guys have. So make sure you put your questions in the chat, and we may have a time where we'll just have you unmute yourself and ask questions out loud if we need clarification as well, okay? This is a time for you guys to get your questions answered. We have a presentation, but then we want a deep dive, because again, this money, yes, it's select towns, but these funds will run out. And I want to make sure everyone who's on here tonight, you set yourself up for success so that you can actually take advantage of this, because this is one of those once in a lifetime opportunities that we don't want to miss. Okay. So without further ado, we have Miss Anastasia on the line.
Thank you, Denisha. Good evening, everyone. Thank you so much for joining us tonight. I know it's a holiday, and you guys have more fun things to do. My apologies ahead of time about my voice. I'm kind of in the process of losing it a little bit, so I've been getting all the germs from the kids. Tonight, we will be talking about this exciting program, MassDreams grant, that is provided to us by MassHousing, and it is available through approved lenders that's on the list with MassHousing. The main features of this program is that it's a non-repayable grant. You don't have to pay it back. You get you can use 5% of the grant money towards the down payment. So you can cover 5% of your down payment with that money. The remaining of the grant money you can use to cover your closing cost. So, and the maximum amount of the grants is $50,000. So it all really comes down to how much you make, where you currently live, and where you're going to be buying the property in. So MassHousing came up with a list of disproportionately impacted communities during COVID. And here's the list of all towns that made it, you know, well, pretty much if you live in one of these towns at the moment, you'll be able to qualify for up to 50,000 grant money. So you see the list. If you see the town where you're currently living on this list, you have a chance to apply and see if you can get approved for a grant money from MassHousing.
Can I interrupt for a second there,
Yes.
Anastasia? So if you see this list, I'm giving you guys a chance to actually look through it. I think it's in alphabetical order, so you can skim through to see what town you live in. If you are not on this list, can you put a 1 in the chat, please?
If you're not on the list.
If you're not on the list.
Okay. So if you're not on the list, by the way, and let's say your co-signer who will be on the application currently living in one of these towns, you'll be able to qualify for this program as well. So MassHousing doesn't require for a certain timeline for you occupying a property in one of these towns. So as long as you can provide at least 2 documents from this list that's dated within 30 days when the loan is going to be submitted to MassHousing, you can get qualified for this program. So you see the list.
You can move after before the fact, Anastasia. So let's say today you live in Newton, for example, or you live, I can't remember the name of the places, but you're not on the list. Are you able to
moving? Yes, if you're moving and you moving, you changing address on any of this paperwork that's listed on this slide, you can, as long as you can provide proof that you currently, at the moment of applying for this loan, you're living in one of those towns, you have a chance to qualify.
And I just want to interject there. Thank you, Anastasia. So what she's saying is, even though you're going through, let's say you're thinking about buying right now, but you haven't actively started that process and you're thinking, I'm not going to start until 2023, right? She's saying now, if you need to move or your lease is up soon, looking for a place that's in one of these approved towns makes sense, because then you'll be able to qualify because you'll have at least 2 of these on this checklist with the address in one of those approved towns, because you're going to have the utility bill because you're renting a new apartment, right? You're going to have the current lease or rental agreement. You're going to have the bank statements because your mail's coming there. You're going to have voter registration. So now this is where this session is to help you guys start being strategic and planning how to make all of this work for you, essentially, right? So if you're not in one of those towns now, but you are able to move, is it worth it? It might be worth it for you to relocate for a little bit, but you have to be on your A game, right? It's not I'm moving, but then we'll talk about it later. Your finances aren't in order. We need to make sure that we have everything so that you can get pre-approved to maximize on this. In the chat, I put the link for the Zoom if you want to share that with your friends or family so they can join. I think some people said they're having trouble. Please feel free to share that with anyone. Continue, Anastasia. Thank you.
Thank you. All right. So on this slide, you can see eligible uses of funds, how you can use this grant money. As I mentioned earlier, you can cover up to 5% of your down payment. It's based on the purchase price or appraised value. So whichever is less, that's how we will calculate that 5%. The remaining of the funds can be used to cover your closing cost. And it's pretty much everything that lender charges for, appraisal, whatever your attorney will be charging. So you see legal services, settlement and escrow services, survey, title insurance, transfer taxes, and even prepaids and escrows, meaning all the taxes and insurance we're going to be collecting in the escrow account can be covered by the remainder of the gift grant as well. In addition, if there's money left over, we can cover upfront mortgage insurance premium. So on conventional loan, you pretty much, you're going to be, you're going to have no PMI. So everybody knows PMI, private mortgage insurance, that's usually added into your total mortgage payment. So with this grant amount, you can pretty much pay the whole lump sum amount for your premium mortgage insurance and get rid of PMI altogether. If you qualify for FHA, obviously PMI will remain there. However, upfront mortgage insurance can be covered at the closing as well with this grant money. And instead of being financed into the loan amount. If remainder, if again, you have more money, if you have enough funds left, you can buy down the rate and pay and cover discount points. So essentially, you will try to use the whole amount that MassHousing is gonna pre-approve you for, so you can, you know, maximize the benefit of this grant and get the better PMI. Obviously, I'm sorry, get better rate, get rid of PMI, and cover all of your closing costs. So which properties are eligible and what MassHousing is required as far as the occupancy? So the properties has to be either a condo or a multifamily, obviously single family and multifamily homes up to 4 units that are going to be located in Massachusetts. You can buy a property anywhere in Massachusetts. You don't have to purchase a property in the town where you're currently living in. You can qualify for the program only if you live in one of those towns. You have to be owner occupied, and you must reside in this property for the remainder of the loan. While you're having MassHousing financing, you have to occupy that property. You can refinance in the future. Obviously, you can sell the property, and that's okay. As long as while you have MassHousing financing, you occupy a new property, you can move forward with this program.
One question, Anastasia. So I just want to check, guys, if you are unsure of what she means by that in the chat, just let us know. So what she's saying is, once you have this mortgage product or this loan product, you have to live in the property. If you know you don't want to live in it anymore, then you have to refinance. You have to go to a lender and say, I want to borrow pretty much again on this house. So they issue a whole new loan to take you out of the MassHousing product, because you cannot have this MassHousing product and then move out of the property. They want this to be for first-time home buyers. Question, Anastasia, how long do you have to occupy it before you can refinance, I guess?
Well, technically, if you buy in a primary residence, you have to, with the, you know, suitable financing, you have to occupy the property for at least 1 year.
Okay.
So, but obviously circumstances change sometimes, so we can't, you know, control everything that's happening, right, out there. So, but disclosures always ask, disclosures that you're going to be signing always ask that you have to occupy the property for at least 1 year if you buy it as a primary residence. So all borrowers who are going to be on the application have to go through a home buyer education course at any locations that MassHousing has approved. So there is a list that I'm going to be, I mean, I'll share the link of all the locations that MassHousing has on the list, so you can pretty much take a course at any of those places online or in person and get get home buying first-time home buyer certificate that you will have to provide to the lender and to MassHousing. This grant program has to be paired with MassHousing first mortgage. So which actually, well, we have 2 options for first-time home buyers, and those options have down payment assistance available as well, which we're going to talk in a little bit. At least one applicant must be a resident of disproportionately impacted communities, and all applicants on the application have to be first-time home buyer. So what it means that you you cannot be associated with any properties, even if you're on the deed, on the title, on, let's say, your parents' home. You are already considered a home buyer, so you're not going to be able to qualify. So you cannot have any interest in any of the properties in the past 3 years in order to become a true first-time home buyer. All right. So MassHousing has income restrictions set up for the maximum amount that you will be able to get. And it's all based on how much you make per year. We're going to share a whole breakdown of area median income, what it means, which counties and towns fall into 100% and 135% of area median income. So if you, I think we should probably move to the next slide. So if you are here, right, in the 100% area median income, you can qualify up to 50,000 grant from MassHousing. And if you make more, unfortunately, the amount of the grant goes down to 35,000.
So can we take a look at this a second,
yes.
Anastasia? So what I want you guys, I think you can see it a decent size, hopefully. We're going to send this out to you guys so you can take a look at it again to make sure you qualify. Look at in the bold letters are the counties. So look at the county that you live in. And then you're going to see your town below that, right? You're going to see the income. So if we go from left to right, you're going to see the county and then the town that you live in. You have 100% AMI, we'll talk about that later, and then 135% AMI. And you're going to look at those numbers. If you make at or below those numbers, you are eligible for this program. If you make more than that, then you are over income, and then there are other options available to you. Is that correct, Anastasia?
That is correct, yes.
Okay.
Yes.
If
right.
you guys, so I want you guys to take a moment and look through so you can identify kind of where you fall in this. And I didn't state at the beginning, tonight we're using the MassHousing product or program. So we're going through what their qualifications are. Next week, we're going to be going over the One Mortgage program. And so you can see what the difference is between the two. They're both under MassDreams, but they have slightly different qualifications and eligibility for it. So I want you guys to be aware of them because you want to know all of your options, because some people fall into both pools and some people fall into one. And some people fall into neither one, but there are still options available to you, right? So the whole goal is to make sure that you know all of your options so that you can maximize on all of your options to get financing to help you purchase a home. Again, please don't be shy. If you have any questions, put them in the chat. If you don't want everyone else to see it, you can send it to me individually as a separate chat and I'll state it out loud, okay? I want to make sure you guys understand how this works. That's why we're having this session, okay? One of the questions is the range between 100 to 135% for single and married individuals?
So,
or just up to?
Up to. Yes. So, and MassHousing is very strict about this restriction. So if you are just a little bit over the amounts that you see, you'll have to get less from them as for your grant money. So you gotta always reach out to the lender, to a loan officer who can calculate your income correctly. So you are not guessing and trying to calculate it yourself. Unless you have a salary, that's a different story. Salary is a salary. But when it comes down to hourly income, or bonus commission. The way you calculate it is different than, let's say, how lender is going to be calculating your income. So instead of guessing and trying to figure it out yourself, please reach out to a loan officer. I'm always available to answer any of your questions myself. So just, have the right person looking at your income and giving you right advice.
Yep. So I would say if you think you're close to that number, what that max is, you're absolutely right. You're speaking to that lender. If you know you're at 60,000, 70,000, and there's not a lot of, if you're, keep it simple, W-2 employee, so your salary's kind of set, it's the same for the most part, not a lot of overtime or anything like that, you can be comfortable in that. But if you know you have overtime, you're self-employed, you have a side hustle, you get bonuses, all of those things add up. And depending on the time frame of when you do all of those things, will depend on if the lender counts it or not. And that's where it starts to get really sophisticated. And you need to speak with a loan officer to figure out if you're income eligible. Because if you're over the income, they don't give you any money. That's it. Well, at least you won't have all of the benefits, is what I should say. So you want to make sure that you qualify within the guidelines. For MassHousing, correct me if I'm wrong, Anastasia, it is the income this is for the household, and it doesn't matter how many people are in your household. This is the total, right? You can't go over
this.
The
previous, so MassHousing, MassDreams, right, grant program has this particular calculation put in place, and it shows the total annual income for all of the applicants combined on the application. So we're going to take a total income from, let's say, two clients on the application. We're going to combine it and see if, which 100% or 135 AMI you're going to fit into. So, and based on that, MassHousing going to be looking exactly the same way at your income and calculating it. So that's why, but before you get to MassHousing, you have to go through a lender, because MassHousing doesn't finance the loans directly to the consumer. You have to go through one of the approved lenders. So how to get started? These are the first initial steps that pretty much every client will be going through. So it is getting pre-approved with the lender. So finding your trusted loan officer, getting pre-approved. So the loan officer looks at your income, at all of the documents that we already looked at on the list, confirming your residency, looks at your credit, assets, pretty much doing the whole pre-approval. And if that pre-screening goes through and you are getting pre-approved and everything is in order, you can then go to mymasshome.org and go through a few steps, questionnaires, just literally 5 minutes of your time. Very simple questionnaire. What that does is gives you a pre-eligibility letter directly from MassHousing, and tells you that you may be able to qualify for this program. It doesn't secure your funds just yet, because in order for you to get to that point, you have to get a signed purchase and sales agreement in place. So you obviously need to go through first-time homebuyer test, right? That education class that I was telling you about. Here's the link for all of the approved locations by MassHousing. So you will be able to find a location that's convenient for you, that has availability, because right now classes are obviously backed up. A lot of people are trying to qualify for this program as we speak. And make sure that you not waiting to reach out to the loan officer or start shopping for a home until you get that certificate from your, first-time home buyer test, because you can do it all simultaneously. The step of getting pre-approved and get pre-eligibility letter from MassHousing is important to do right away. But this step with the first-time home buyer class can be done while you're shopping for a home, while you're making offers, because it will, you will have time to provide it to the lender until your, mortgage contingency is due date. That's going to be listed on your purchase and sales agreement. So MassHousing gets your loan and secures your funds only when you get your signed purchase and sales with the help of your realtor and obviously an attorney, and you get the signed purchase and sales. We submit your loan, the whole package, to MassHousing directly. MassHousing looks at the loan, goes through all of the paperwork that we're going to be collecting on for you up front, and approves. It gives official approval that you are going to be getting those funds. So be careful with, I would say, the step when you are relying on those funds for even your earnest money deposit, because you can get to the point of signing purchase and sales agreement or even getting an offer accepted without putting a deposit down, because the seller would want you to do that, to put a small deposit down at the signing of the offer. And then in about a week, you have to put more money down to sign your purchase and sales agreement. You're not going to have MassHousing grant, that MassDreams grant, available to you until the closing. So you have to have some funds available, whether it's a gift, or your, let's say, retirement or savings accounts that you're going to be using. It's all, you can discuss it all again with the loan officer, but you have to have some funds available to you up front before you get your grant money. And let's say you don't want to keep that amount that you're going to be the one that you're going to be giving to the seller. If you don't want to keep it in the transaction as part of your down payment, you can get that money back at the closing once you get the gifts. Once you get your grant from MassHousing.
So to clarify, are you saying you do need to have funds up front to submit an offer and purchase and sale? So you're earning money deposit, but you can have that reimbursed at closing from the grant. So if you had to provide $5,000 or $10,000 up front, you get that back at closing?
Correct.
Okay.
Yes. If you want to, you can choose to keep the funds in the transaction, so your down payment will be higher than 5%. But if you really, if you need those funds back and you would rather use the full 5%, only 5% that will be covered by the grant, then you will be getting those earnest money deposits back at the closing.
Do you guys understand that? Let me know if you have any questions. So in there, let me see, one question I did see is, how much should we have saved? So that's a difficult question to answer because it's based on the purchase price. Usually when you're submitting offers, agents, sellers want to see that you're putting your down payment, kind of most of it, by purchase and sales. And that is traditionally between 3.5% down of the purchase price. So if it's $100,000 house, it would be $3,500 that they want to see you putting down. So it depends on the purchase price to know how much you need to have saved. I tend to tell people start at $10,000 as your first goal. And once you get there, you keep increasing it by $5,000 just so you have a savings target until you speak with a loan officer to see how much you actually are pre-approved for to know what your number would be. So it's a percentage of your end purchase price. And if you're like, well, I don't even know what that is, let's start at 10,000 and then we keep increasing, because the more you have saved, you can never have enough saved. I'll put it that way. There's no such thing as too much money saved. Question in here, Anastasia, was for the first time home buyer course. If they took the class or they want to take the class, does that need to be completed before they apply for these funds? So before they speak with a lender, do they need to have the first time home buyers course completed?
No, you can go through these steps, get pre-approved, get pre-eligibility letter, sorry, from MassHousing. You can start looking for a home. And while you're doing all of those steps, you can work on getting your first time home buyer certificate done. So as long as you have it before your mortgage commitment due date, you're okay. Because at the beginning, everybody understands, how many people right now trying to qualify for this program all at the same time. So doesn't make sense to wait for everyone, to have that certificate before they can start the process. So you can get it while you're going through the financing process, as long as you have it before your mortgage commitment date is due. You good?
Yep. And that rule, so you'll learn between this week and next week the difference. So for MassHousing, you're good. You need it by the time you close. For the program you're going to learn about next week, they need it before you even apply, depending on what town you're in. So these are all the little nuances.
Yeah, that one is more strict.
They're a little bit more strict. So this one, they definitely give you a little bit more leeway. In here, someone asked, how long are they offering this? Until money runs out. This is a first come, first serve program. No one is guaranteed funds until you have a home under agreement. So all of you, I encourage you, I put the link in the chat, and I've been putting links as Anastasia was presenting on different things. I was putting the link in the chat for you, and I'll put them again. You can find out if you're eligible or not by going to the My Mass Home website, and they'll let you know by the end of this week if you're eligible or not. That doesn't mean that money's yours, right? Yes. Because everyone who has went out and looked for a home and got a home under agreement where they submitted an offer, the seller said, yes, I want to sell my house to you exclusively. They signed paperwork. They're the only ones who are, for the most part, guaranteed those funds once they get to closing, because they have a house under agreement. So when you speak to, or you find out if you're eligible, that's just step one, right? You actually have to have a home under agreement to be guaranteed these funds, okay?
Yes. Just so you know, this second step, it's instant. It's a questionnaire online, 3 steps, well, 3 questions, and they instantly give you a pre-eligibility letter that you can possibly qualify. So, but one of the questions there is your annual income. And this is where I encourage you to get pre-approved first, so the lender tells you what the total income you have to use when you going through this quick questionnaire. Well, questions, right? So we're already in the questions, right, Denisha?
Yep. So let me see. I've been answering them as we went along, but I'll go back. So one of the questions I had, and then someone else asked, and I think you answered, but we'll bring it up again. Do I need to come to the table with money in hand? So is this a program where I can have $0 saved, like literally 0 in my bank account, and buy a house?
No, you cannot. You cannot. Again,
what's
because
the more realistic expectation? So what is more realistic for me if I want to use this MassDreams? What should I have?
You gotta have, well, usually first deposit is $1,000. to secure the property when your offer is accepted by the seller. And then, like I was saying, it give you have 10 or 7 days to sign purchase and sales. And this is when the second deposit is due. And that is going to depend on how much is the seller expecting for the second deposit to be, or what you're going to need, what your realtor help you negotiate. So let's say if you have a total of, let's say $5,000. So your realtor on your behalf can negotiate that. Obviously, it depends on person, depends on the price point and everything. So I've seen small deposits being accepted by the seller before. And $1,000 will go to the seller when you offer is accepted, and then $4,000 will be going to the seller at the signing of purchase and sales. So if you'll have an arrangement like that, then great. You only need $5,000 to get to the point where your file is going to be submitted to the to MassHousing, and your actual funds, grant funds, will be secured by MassHousing for you.
So part of this process, again, you need a well-oiled machine, right? So you need to have the loan officer who's thorough. You need to have the real estate agent who is a master at negotiating and having those conversations with sellers and listing agents, so that they understand, even if you don't have all of the funds, it's once they accept you, it's kind of guaranteed that they're going to get those funds because it's part of this grant program, right? So you want to make sure that you're selecting professionals who are knowledgeable, who are confident, and they've done this. So again, we have, after this, I'll send you guys an email with all of the information. But if you need an agent, let us know, because we do have kind of those people who are tried and true. They know what they're doing and they can help you as well. Any other questions? So someone asking, yep. So you need to have some funds. And if you're not aware of the home buying process, you do need to have money, earnest money deposit. So at least $1,000 to submit your offer. And then what you sign with purchase and sales would be kind of between you and your agent to negotiate with the seller. And then you're going to have an inspection, most likely, because you're buying a house that you've never lived in before. There's going to be a cost associated with that, and that cost varies. So you're going to need to have funds for that as well. And then you're going to need to do an appraisal to make sure that how much you said you would pay for the house is how much the appraiser said the house is worth, so that the bank says, I will lend you that money. So then you need to pay for that. And that's something that you get reimbursed after you kind of go through the process with the grant. So there is some cost associated with purchasing a home upfront that you need to budget for. So this isn't a come to the table with $0, right?
Yes.
That you need to come with some money, but do you need to have all of it? Maybe not all of it. But that depends on kind of the team that you put together, how they can negotiate on your behalf. But why we're making you guys aware is we want you to be prepared. Right? We want to make sure that you're doing everything you can between now, I say between now and the next 6 months, to be able to actually benefit from this program. I've been telling people this Christmas might be optional this year. This is one of those years where it's like, I need to get my finances in order. If my credit's not where it needs to be, if I don't have any money saved, I should not be going to Black Friday sales. I should not be spending a lot on Christmas gifts, because I need that money to pay down my debt, so I can, or save, so I have money for all of these things. I'd much rather gift you a house than gift you a PS3 or whatever number they're up to right now, right? So again, it's just planning. I'm going to look through and see what other questions we have that I didn't answer, Anastasia.
Okay.
Can you, if you purchased a home 5 years ago and you sold it 5 years ago, do you still qualify as a first-time home buyer for this program, or is this exclusive? You've never owned a house before?
Yes. So if it's been at least 3 years since you sold it, then you can be a first-time home buyer again. right? Is that the question? If
They're trying to
yeah,
see if they would still qualify if
yeah,
they owned, let's say 5 years ago, but within the last 3, they have not been a homeowner.
yeah, you're gonna be, you will be considered a first-time home buyer, as long as 3 years has passed since then,
Okay,
since the sale of the home.
hold on, I'm going through. There are a few more questions, but I'm asking them to clarify before I read it out loud. Okay, so I don't live in one of the towns. Anastasia, can you go back up to the approved list? I know that was at the beginning, but the 29 towns.
There you go.
If you can read those out for me while I go through,
Sure.
that'd be helpful.
It's Attleboro, Barnstable, Boston, Brockton, Chelsea, Chicopee, Everett, Fall River, Fitchburg, Framingham, Haverhill, I don't know how to pronounce that, sorry.
Holyoke.
Holyoke, Lawrence, Leominster, Lowell, Lynn, Malden, Methuen, New Bedford, Peabody, Pittsfield, Quincy, Randolph, Revere, Salem, Springfield, Taunton,
Taunton.
Westfield, and Worcester.
Perfect. So I will send that list out to you guys as well, so you'll know if you qualify. Should you get quotes from multiple lenders? Yes. I tell people you want to speak to 3 lenders, so that you can see kind of what they have. Sometimes it's a phone call to figure out what their interest rates are, what they offer, because you'll know if it makes sense or not for you. Anastasia is one of the best. I give you guys kind of questions to ask lenders when you're interviewing them, because it matters in terms of their experience. How long does it take them to close? What's their communication style? All these things matter, because when you're going through the process, it can get chaotic, and you want to make sure you guys are on the same wavelength. So I always encourage people to speak with the lender and make sure that you guys, it works, right? That relationship works, because you're going to be with them for at least minimum, we're going to say 6 weeks in best case scenarios, right? So if you from start to finish 6 weeks, but for some people it's months, it's a year, it's a process, right? So you want to make sure that you're comfortable with that loan officer. So I can send you guys some questions you can ask them.
I want to add here, the MassHousing release rates to all of the lenders, and I'll tell you, they're very similar. Very similar. So it's not, you don't have too much flexibility there compared to regular programs, FHA, conventional loans. So, but yeah, I agree with Janisha on everything that you just said.
And that's good to know. So for MassHousing, they kind of tell the lenders what the rate's going to be, is what I'm guessing, I'm getting from Anastasia. So you can literally, that's the question when you ask, right? If everyone has the same rate, now that's easy. Do we connect? Do I have a connection with you and I want to work with you and give you my business, right? That's what it becomes if all else is equal. Someone asked here, can you use your credit card for the inspection and appraisal?
Yes. So appraisal, 100% yes. And as far as the home inspection, it will depend on the home inspector. If they accept credit cards, then you good.
Okay, perfect. Someone asked here, so I know the answer. Let me see, hold on. If you took the home buyer class, but you don't have the certificate, what happens? If you took the class and you completed the class, email them and they should send you the certificate because you completed the class, and they will have it all documented. If you missed a couple classes and you're trying to finagle because you didn't finish the full 8 hours, they're going to tell you that you were incomplete and maybe ask you to retake the class that you missed, because they do log if you made it to all of them. If it was on Zoom and in person, they made you sign, so they know if you were there or not. So if you completed the first time home buyers class and you do not have a certificate, email them or call them and request it. okay?
Mhm.
You learn that you can have the inspection and appraisal on a credit card, depending on the provider. You also want to make sure you're talking to your lender, and this is where you guys are building a relationship. You're being transparent with them. If you're, and we'll talk about it later, debt to income, right? If you're putting stuff on your credit card and that's going to hurt you, then you don't want to put it on your credit card, right? So make sure you're talking to your loan officer to make sure you're okay there. Can you combine first-time home buyer, first-time home buyer grants with this?
Yes, yes, you can. So for instance, if you got a grant from the city of Boston, if you got the down payment assistance from, again, programs that you qualifying through MassHousing, which we're going to get to in a few minutes.
Yep.
You can combine other grants and down payment assistance with this program. Yes.
Perfect. The One Plus Boston program, we're going to discuss that next Monday. So that's a different loan program product. So we'll discuss that next week. So I wanted to keep them separate because it gets overwhelming, because some of the information is the same and some of it's different. So this is where it's MassHousing. I think most people qualify under MassHousing. This is the most broad of the two. The One Mortgage MassHousing has a little bit more restrictions, and it's for those at a even lower income tier. It's kind of where their max cutoff is. So this one goes up to 135% of AMI, and you guys saw what those numbers are, and I'll share that with you. And then you have the One Mortgage is up to 100% of AMI, so even less. So it depends on where you fall, okay? So you can combine these. Depending on your agent, again, they should be looking, and your loan officer, what other programs can you combine with this? There's some towns that have down payment assistance that can be combined with this, right? So Brockton has down payment assistance, Boston has down payment assistance, Somerville has down payment assistance. There's tons of different towns that have their own assistance as well. You can combine all of these, but again, you need to be on it. So as soon as you have a house under agreement, you're just tapping into as much money as you can find. And you want to work with your loan officer and your agent to identify those so that you can capitalize on them. Okay. Let me see. I think that's it for now. You can continue, Anastasia, and then I'll write down the questions here, and then we can, I'll pick these up at the end.
All right, perfect. So as we mentioned earlier, that you can actually get more money to help reduce your loan amount that you're going to be financing. So you can qualify. You can try to qualify for either one of these programs. So first one is Workforce Advantage, which is conventional and FHA financing. And the second option is first-time home buyer conventional financing. So both programs offer down payment assistance, and you can combine it with a grant, a MassDreams grant. Okay, so please note, each program has its own income restriction. Each county has its own income restriction. Some towns, cities have additional guidelines. So we, again, all of these guidelines is the best to verify with your trusted loan officer, because it gets really complicated to try to figure it out all by yourself. So let's talk a little bit about this Workforce Advantage program. It has a minimum credit score of 640. A maximum debt to income ratio on this program is 45%. You have to be a first-time home buyer. You have to occupy the property as a primary residence for the life of a loan. So you have to, while you have mass housing financing, you have to live in this property. There is a deferred down payment loan, down payment assistance loan provided by Mass Housing if you qualify for this program. So you will have to pay it back if you at some point refinance or sell the property. However, it's not, you're not going to be paying interest on this loan. So it's going to be attached to your property as a second mortgage with 0% interest. There is no mortgage insurance cost to the borrower if it's a conventional financing. The minimum down payment is 5% on the conventional, 3.5% down on FHA financing. If you buy a single family or a condo, so 1 unit, no required borrower contribution per Mass Housing Guidelines, and you can finance up to 2 units over this program. And if you buy a 2 units, the 2-family home, you'll have to put at least 3% down of your own funds. And like I said, total household income limit is set by Mass Housing, and acquisition cost limits also apply per Mass Housing, based on the county and town where you're buying this property in. And the second option that we have is a first-time home buyer conventional loan. You have to have at least also 640 credit score, 45% debt to income ratio. You also have to be first-time home buyer, occupy the property for the life of the loan. You have a chance to get a down payment assistance if you want to. However, the guidelines are a little different on this one. You will have to pay interest on this option, where the other one, it's 0% interest rate. This one, you're going to be getting 15-year mortgage with 2% rate that's going to be financed, and it's going to be attached as a second mortgage to your property. You can finance a single family or a condo with 3% down, no required borrower contribution in this case, and you can finance up to 4 units. So if you buy in a multifamily, minimum down payment is 5%, and 3% has to come from you. So MassDreams, right, gives you 5% on the conventional. If you buy in a single family or condo, it's great because you don't need to come up with anything out of pocket towards the down payment, technically. But if you buy in a multifamily home, you will still have to put 3% down of your own funds and then get 5% down payment assistance. Well, you can use grant to cover your 5% on top of this 3%. So your total down payment will become 8% if you buy in a multifamily home and you qualify for MassDreams program. You have to obviously complete homebuyer education class. And if you buy in a multifamily home, you have to take a second class. It also can be done simultaneously, and it's a landlord counseling. So you're going to get 2 certificates, one just for first-time homebuyer education class, and one is for landlord counseling. And there are also income restrictions and cost limits applied depending on the county and the town where you're going to be buying this property in. And this is a little bit more in depth about the down payment assistance that I already mentioned about earlier. So if you qualify for workforce program, you can technically get up to 10% of your sales price in some cities, right? So it's either city of Boston, Framingham, or Randolph. There's a list of gateway cities that MassHousing put together. And again, consulted with a loan officer to find out what your options are. If you qualify for this program, obviously you'll in you buying in one of these towns that on the list, you can get up to 10% of the sales price or 50,000, whichever is less, as a down payment assistance with 0% interest rate. And this mortgage will be deferred until until you decide to refinance or sell the property.
So I want to be, can I interrupt for a second, Anastasia? So this is separate from the grant. So what Anastasia is going over
Yes.
right now with you guys is down payment assistance programs available through MassHousing. So they have programs that you can combine them, right, Anastasia? So that's
Yes, you can combine them.
up to $50,000 grants, and then it sounds like a potential up to another $50,000 or $30,000 that you could potentially combine for more funding. One is a grant, one is a loan.
Yes. I mean, this one, if you qualify for this program, it's so amazing because you're going to reduce your mortgage payment by putting larger down payments, and then you don't pay interest on it. So obviously when you sell refinance, you'll have to pay it back, but you'll have enough equity to pay it off in the end. So with the second option, first time homebuyer conventional program, it's a little different. So since the income restrictions are higher, there's an option for you to get up to $15,000, right? So 5% of the sales price of $15,000, whichever is less. And it is financed as a second mortgage with 2% interest rate. And it is going to be a 15-year mortgage that is going to be part of your mortgage payment. So you're going to have pretty much two mortgage statements, one for first mortgage, one for the second mortgage. And you will have to pay it back if you refinance or sell the property. So if you guys have any questions about any of this information, I mean, there was a lot that we shared with you today. Feel free to contact me anytime. I'm available 7 days a week. So you can reach out to me anytime, and text, email, call me with the questions. I'm happy to answer them all. And thank you so much for this opportunity, Denisha.
Thank you so much, Anastasia. She is truly available 7 days a week. I've tested it. It's true. I would say thank you for this. If you guys have any further questions, please put them in the chat. I wrote down a bunch of questions that I'm going to go through now from what I did receive in the chat thus far. This was very informative. It was a lot of information. As you guys can see, for the grant, it has its own qualifications. And someone asked before, what's the credit score to qualify? And the grant doesn't necessarily have a credit score, but lenders have a credit score that they need in order for you to qualify for a loan product or for a mortgage. Generally, it's about a 640 is the minimum, right, Anastasia, for these types of...
Yes, in order for you to make it all happen and get a grant plus financing, for your first mortgage and potentially second as well, you have to have at least 640 credit score.
I tell everyone, I want you to have a 680 before you reach out, because when they pull your credit, it's going to drop a little bit. So you want to give yourself a little bit of wiggle room in there.
Yeah,
So I
I
try
want
to higher.
to also, sorry, I wanted to add to about credit scores. So let's say if you come to me and I pull your credit report and the credit scores come in lower, I will help you figure it out how to improve it quick, because as you, I mean, we mentioned that this is a limited opportunity, right? So as soon as they run out of funds, the program will most likely be shut down. So I will help you improve your credit scores. We have tools that I always, use to help people come up with a plan and quick, and we can, depending on the scenario, obviously, I can improve scores in sometimes 5 business days, and the average is about 30 days, depending again, what needs to be done. But don't feel like you have to figure it out on your own. So just, again, feel free to start the process so I can give you the right advice.
Perfect. Yep. So thank you for that. Anastasia helps you boost your score so you still remain within qualifying. Someone asked how do you speak with multiple lenders without them pulling your credit? They're not going to be able to give you an accurate pre-approval without them being able to pull your credit. So what you need to do is gather all your documents. And if you narrowed it down to your 2 or 3 lenders, that same week, you need to give them all of your documents so they all pull your credit at the same time. So what that looks like is if you're sitting down today and you're filling out the application, then everyone's going to ask you to fill it out online, right? So you're sitting at your computer, just dedicate the day to submitting your application and send it to everyone. So they all have it same day, which means they're probably going to pull it within the same week, right? Depending on how busy they are, they may not pull it same day, but they will pull it in the same week. And that has less impact on your credit score compared to going to someone today, going to someone 3 weeks from now, and then deciding, I just met another lender that I like, and going to someone else a month from now. So bunch them together and speak to all of them and submit all of your documents. That will hurt you a lot less than if you spread it out. Hopefully that helps. Let's see here. Someone asked in the chat, I just saw, what happens if they run out of money? You don't want that to happen to you, right? So that's why we're here, and we're going to get everything in order. If I'm being honest, the whole world is trying to have access to this money right now. So I'm hoping it will be available by the end of next year. They have started closing on some of these loans currently. So it is when I say Christmas might be optional this year, I wasn't joking. It is where we all need to buckle down, get our finances in order so that we can be in the bunch that can benefit from this, because there's a lot of money. I will say that. I think it's 65 million. I can't remember the exact amount.
Yes, 65 million. Yes.
So I think it worked out to be about 12 or 1,300 people that they could help. Was that what it was? I can't remember. I'll do the math. If you all got $50,000, but not everyone's going to qualify for the full 50, right? So the goal is to make sure that you qualify by getting your credit in order, by saving, by paying down debt. And that's what we're building to help you guys. So if you know you need help with those things, we have programs for that. And I'll send out kind of what your next steps should be after this. You guys will get that. I want to send it out once. So after next week, you'll get kind of the to-do list. So next steps after you've heard about both programs, so that you guys have that. Another question someone had, but I wasn't sure. So if you want to put it again in the chat, it was grant and repair programs to update your house. I believe I wrote it down. That's not this program. That would be if you're looking for, let's say you're buying a home and it needs work, that would be a renovation loan or a
It's
tool.
going to be a rehab loan. Yes.
So that's going to be a different loan product. Does this qualify, Anastasia, if you're using a renovation loan or a 203K loan? Does this grant program qualify for that?
Not really. And then you're not going to have enough you know, to you're not going to have enough left to cover your budget, repair budget. So you really, you got to have, you have to use these two programs that I was just talking about, which are geared towards first-time home buyers. If you're looking for a rehab loan, that would be FHA 230K. And I do these all the time as myself, but there will be no, you know, grant option available.
Okay. So if you are purchasing a home that needs work, then it would be a different product that you need. If you already own a home, then this does not apply. I can send resources for homeowners, but that is city specific. So if you're in city of Boston, there's tons of resources available if you need work on your home. Outside of Boston, we need to research what your specific town has to offer. Someone asked about the home buyers course. The courses, so there are a bunch of agents out there or lenders, other professionals who offer like a free home buyer course, and it's like an hour or 2 hours. That's not what we're talking about. The certificate program is an 8-hour course. So it's either 4 days of 2 hours each or 2 days of 4 hours each of a course that you would take with an approved provider. I will put the link in the chat again, but I'll also send it out via email. They will issue you a certificate at the end of that 8-hour course that you now provide to your lender so that you qualify for this down payment money or this grant money or any funding out there, because they all have the same requirement that you need this certificate. So that's an 8-hour course. The price ranges, I think, from $25 to about $50, depending on the provider of the course. And you can use that to purchase anywhere in Massachusetts. So you pick one, it's good for all, as long as it's from the approved lenders list. If you have a Section 8 to homeownership voucher, and you are trying to purchase a home, there's a specific program that you have to be in. I believe BHA is really the only one right now offering it, because I remember I did a session earlier in the year on that, and a lot of programs discontinued theirs. So BHA is the only one that offers it now. It would depend. You'd have to work with your lender to see how or what you can combine for this to work. I know they work with the one mortgage loan product, so I feel like correct me if I'm wrong, Anastasia, but I think the Section 8 to homeownership, I've only seen it really work with the one mortgage loan product, and then they allow you to combine things after that.
I would actually confirm that with MassHousing and get back to you guys.
Okay.
Mhm.
So we're not sure if you can use MassHousing $50,000 grant program with the Section 8 to homeownership. I'm 90% sure you could with the one mortgage, but if you come back next week, you can ask the loan officer next week because she'll be knowledgeable of that process. And I will ask around as well. Another question we had was kind of, what are some of the upfront cost estimates? So kind of giving an idea. So we said before, you have your earnest money deposit when you submit an offer. So that's about $1,000. You have your inspection, which depending on the house type, we'll just round and say about $500. So we're at what, 1,500 thus far? You have your appraisal.
Appraisal is about like 550.
Okay, so I'll keep my math easy and say 2,000 so far. And then your purchase and sales deposit, which is usually another,
well, it depends really. It depends on what, yeah, it could be 2%, could be 3%. So,
right.
or, you know, if let's say the seller doesn't have any other options and your offer is coming in and they like the price and everything, I'm sure they'll, you know, be understanding and in some cases. So I can't speak for everyone, but I've seen smaller deposits on, let's say, VA loans, because there are VA loans with zero money down. So I've seen people putting, you know, $1,000 or $3,000 and the sellers were okay with it. So it depends really.
It depends. So what we do know of the quote unquote set fees thus far, we are at 2,000-ish around there. So I'd say always think the higher number, so closer to 3. And then the purchase and sales deposit, that's the part where it could be significantly more or less. You speak with your agent to figure out what they can negotiate for you. Most
Like
sellers
worst
want
case
to have a
scenario, 3%. Worst case scenario, 3%, you guys.
Does that make sense? Okay, let me scroll back up and make sure I caught I think I answered everyone else's questions. Let me go back up. Do you have to pay back the grant if you sell or refinance at any point?
No. This is a forgivable grant. Think of it as a gift. You don't have to pay it back. And then,
So I would, go ahead.
and then obviously there's another portion that we were talking about, right? Is the down payment assistance. That's the one, if you're going to be using it, pairing it with a grant, then you'll have to pay that back, but not the grant, what you're going to be getting through MassDreams.
Okay, so I investor mindset. This is not one of those programs where you're going to try to flip it to get the $50,000 in cash to you, because we'll go through the math of it all. There's closing costs and other things associated with selling a property. So you're going to be taking away from your $50,000 if you were trying to flip this. And then interest rates are high. So it may not be the best time to try to buy and sell right away a property, right? So if that is the mindset, you're like, wait, what's my timeline? Can I buy a house today and sell it by the end of the year? That's not what this is for. This is meant to help those who are really trying to purchase a home and get into the market because there are no other options available for them to be able to purchase. So that is the goal of this program and this product. And they wanted to make it so that people had an opportunity to build wealth. That was the whole goal, so that it's a forgivable, or we'll just say it's a grant, so that once you purchase, you did all the right things and you're able to purchase. They're saying, bless you, you paid for it in your own way. You have equity in your house. That was the whole goal of this program. Someone else here asked, if they work for a union and they're laid off in between projects for about a month or so at a time, would they still qualify for a mortgage? Because now they have inconsistencies in their employment.
Well, we're going to be averaging that income. It's, again, that is, since you know, you work, if the client is working for a union, obviously it's a season, well, I will consider it like a seasonal employment. So we are allowed to average income over the past 2 years. So we cannot use like skip the gaps. You know, we will take whatever you earn, let's say in the past, well, let's say the gaps were last year, and we're going to take the full amount, the total amount that you earned, and divide by 12. So you can still qualify if it's enough to support the property that you're trying to buy, but we're not going to be subtracting the gaps, you know, the amount of months that you skipped when we calculating your income. So once you have fluctuating income, we have to average it. And usually, especially with MassHousing, the guidelines are more strict. So we take 2 years average. But you know, you can still qualify. It doesn't mean that, oh, I can't even try. So you can certainly try.
Absolutely try. Everyone here should be trying. No one should say, I don't know if I can try.
Yeah, that's like, that's exactly, that's what I see. A lot of people, they guess a lot and they miss out on opportunity. So don't try to guess whatever, or listen to what other people say, because unless you speak to a loan officer and do a full pre-approval, it's really all the estimated numbers are not going to get you anywhere. So just get pre-approved. 15 minutes.
Next question on here is, if you if you can't get approved yourself, can someone co-sign with you who will be approved? I think that's the question.
So if you need additional income to qualify and you need to add a co-signer, that co-signer needs to fit in obviously the same restrictions. That person has to be a first-time home buyer, has to occupy the property. That person will have to be on the mortgage, on the deed, on all of the paperwork. So if that's what's going to happen, then you can certainly add a co-signer and qualify together.
Okay, hopefully that answered your question. Someone sent me in the private chat, which year's tax returns do you need to see? So if someone's getting pre-approved between now and the end of the year, what do you need to see? And then if they're getting pre-approved next year, what do you need to see?
So if there's if you're self-employed or independent contractor, we're going to be asking for 2021 and 2020 tax returns to review. If you filed an extension for your 2021 tax season, we're going to be asking for a profit and loss for the last year, 2021, and we're going to be asking for tax returns for 2020 and 2019. And we're going to be averaging that income. But you have to show what you made last year, and it will have to be supported by profit and loss. It does not have to be audited, but you still have to show, your balance sheets and your for profit and loss.
So we will, Anastasia, if you can send me a list of what you need for anyone who's getting or seeking a pre-approval, I will send that out to everyone and we'll compile a little packet for them, so to speak. Because it does matter if you are a W-2 employee versus self-employed or a business owner.
Yes.
Slightly different qualifications or what they need from you so that you can get pre-approved for a mortgage. The money for MassDreams is available now. I think one of the first people closed last week or the week before.
We already closed a couple of loans.
And you may ask how when it just came out. Well, because the rule is you need to have a house under agreement, right? So people who, let's say it was announced, I think September 12th or something like that. Let's say they had a house under agreement September 11th. From the time it was announced, they were able to apply and be eligible. And now they have the house. They were, qualified for the money. The two made a match and now they're able to close on the home with the money. The money's not yours until you have a house. So it is available now. People are closing. So that's why we want to make sure you guys have all your questions answered so that you make sure you are able to do the same thing and purchase a house with this money. I am going to send the replay for this once like Zoom takes a while before they actually make it available. Once it's available, I will send it through Eventbrite again so that you guys have access to it. A few people said they were unable, they didn't receive a link to join tonight. How did you guys receive the link tonight? Because I'm trying to figure out what the issue was, because it went out 2 hours before, I think half an hour before, 10 minutes before, and then 2 minutes before we started. So I just want to make sure I can give instructions for the next one. So you guys did. Had to finagle around Eventbrite. Okay, so I think what I will do next time is send out the email with the link in it directly, which I thought I did this time around, but I will go back and check. And send out maybe instructions. Perfect. So here someone asked, are lenders looking at pay stubs or tax returns? Both.
Well, it depends. It depends. So if someone is W-2 employee and they're getting pay stubs, we're not going to be looking at your tax returns. There's no reason. If you're self-employed or independent contractor, we're going to be asking for your tax returns for the past 2 years.
So I would say you need to have all of them. So what I've heard from, so it depends on the lender. And then what I've heard from a lot of lenders is kind of the tax returns are checking your income over time. And then your pay stubs are making sure you are still currently employed, because your tax returns of the past 2 years, your pay stubs of the past 2 months. If you can't provide pay stubs for the past 2 months, that means something's going on, right? And even how soon before closing do you ask for verification of employment again, Anastasia? Completely separate.
So obviously we do a verification of employment twice. At the beginning, once we get to the underwriting process, when the purchase and sales is provided to us, and then 10 days prior to closing.
Okay, so Anastasia does 10 days prior to closing. There's some lenders who go 3 days prior to closing. So
yeah, this is how it was before during COVID. 3 days, even like the day before.
I've seen that. Yep, I've seen that too.
Yeah.
So they've gone back to where they give you a little bit more wiggle room now?
Yes.
Okay. So I brought that up for you guys just because I've seen it happen where someone, the Lord shined and had mercy on them. They left work to go to the closing, close on their house, and came back to a pink slip. And not because they left to go to the closing, it was already pre, but had they closed the week after that, they would not be able to close on the home because they wouldn't have that pay stub. So just so you know, the lenders are checking to make sure your employment is up to date. I've had a lady who lost her job and was just trying to close on the home and not tell anyone anything until it came time to do that employment verification at the very last moment, and she had to come clean because she thought it was just in the beginning. So you have to make sure you're sticking through things to the very end. We just had someone close last week and she wanted to quit her job, and I was like, absolutely not. You don't do anything at all until you have your house. And now you have a mortgage, so you're not quitting jobs. We're just upgrading and transferring to a different place of employment. So again, a lot of this is strategy. We want to make sure you guys are okay, that you're able to maximize on this. I'm going to send you guys the link once it is available. Please share with your friends, your family. If you guys want to have these in smaller sessions, let us know and we can coordinate that as well. We want to make sure as many people are aware and taking advantage of this and not afraid to look at your finances, because it only helps you in the end, right? The goal is to make sure that you're going to be a solid buyer and that you're solid financially, period. So if there are no further questions, let me see here. I want to say thank you guys for sticking with us to 7:30. You could have been anywhere else tonight, but you chose to be with us, so thank you. They said here, if they started sending their information to another loan officer from Movement, can they switch, or will they be able to, or will you be able to see their documents after it's sent?
Like a loaded question.
I know. So if they already started the application with someone else, they're like, nope, I want to use you.
If you already started working with someone, and you decided to, I mean, I can't, it's a really hard one. I don't want to like step on anybody's toes because, you know, obviously, especially we all, if we from the same company, so if you know, not a lot of lenders, not a lot of loan officers are comfortable with this program just yet, so you gotta have a conversation with that loan officer and see if they can help you, if they've done it before, if they're comfortable with it, you know, you can make a decision that going, you know, after that conversation. And if you, for whatever reasons, it's not a good match, you know, you're entitled to make a change. And all the information can be transferred to a different loan officer. It's within the company. If it's a different company that you started working with, and you want to switch a loan officer, you'll have to, complete an application again, and that lender will have to pull your credit report.
So tricky question. I would say the summary of that is, if you're already with someone at movement, I guess I would ask, why are you switching?
Yeah,
If you
it's
haven't
really
already- if you're
a
submitting
personal
the application.
preference sometimes.
Yeah, it becomes a personal preference at that point. I'm in favor of letting people know up front and not stringing them along. So if you know that you just don't like this person, then just let them know you've decided to go with someone else. If it is that you're just like, I just want to get quotes from everyone. Sorry, Anastasia. In this case, it would be movement has the loan, right? So it's gonna be the same. It boils down to customer service and experience of the loan officer. I don't know who the loan officer is. I love Anastasia. I know quite a few movement mortgage loan officers, but I mean, I love Anastasia. So just
Thank you. Thank you. Like my cheerleader. Thank you so much.
I tell the truth. I'm a cheerleader for a lot of people, but if you are bad, I will never recommend you. So that is not Anastasia. She's been tried and true and tested. If I don't agree with kind of the experience of a loan officer, I let people know. Because it's based on personalities. I'm like, this person is not going to give you, if you need someone who's going to answer their phone, who's going to answer all your text messages, who's going to be available, there's some loan officers who that's not them. And you need to know that up front so that you're not upset with them for them showing you who they were all along. Can't be mad at that. So that's why, for me, it's making sure we're giving you guys honest feedback and feedback from people who've used them before, right? You want to ask for those testimonials and those recommendations. Who's used this person and what was your experience? That's how you should base who you pick. And not just hey, I have a friend who's a loan officer. Okay. Have they closed on these loans before? What's their track record? Like all of that matters. So I am going to send you guys kind of those questions so that you have them.
Did we cover everything?
I think so. Someone asked just now in the chat, would they qualify if they receive pension funds every month?
Yes, we can use pension funds.
Ooh, look at that.
Yep. We can.
But it's still income, right?
Social Security income, pension funds. I mean, any payments that you get from the state, as long as there is consistency and as long as there is, as long as we can prove that you're going to be continuing getting those funds for at least 3 years, we can use those. We can use child support, alimony, income. Again, come to, get together with the loan officer, disclose all of the income that you're getting, and the loan officer will help you figure it all out, because it's all going to be, you can be getting 3 types of different income, and it will have to be all combined when we qualifying someone. So
and you can't hide income, people. I know some of you will try. They look at your pay stubs and your bank statements for a reason, and they go through your bank statement to see money in, money out. So don't think you can hide funds. That's why they ask. Do they check? I know they were trying to last year with the pandemic. Is it official now that they're checking Cash App, Venmo, all those?
Sometimes, yes. So it depends on how frequent the amounts are going out from the account. Okay. And if they're consistent every month repeating, especially like the same charges, the underwriters will be asking where, like, what the concern is, do you have any other additional liabilities, right, that we have to add into your debt to income calculation?
Gotcha.
So they're going to be asking for those when you see every month the same amount going somewhere.
So this is a random question. If you have a Cash App, but you never take money out of your Cash App, does that count? So money never goes, it just stays in Cash App. It never hits your bank account. Do they look at that?
Not really. I mean, if when you asking to if you can use the Cash App to
So
pay
I know,
for anything,
yeah.
or
So some people, so in terms of income, some people use Cash App and they don't transfer money into their bank account. So it's not going to show up on any
we
statement.
can't use those. No, because it's gonna show up. It's coming from Cash App.
Okay.
So yeah, I had a client who would try to borrow, you know, take the funds out from whatever some credit card and use it for down payment assistance and I'm sorry, down payment or closing cost. And I mean, it's all there. It's all you can't hide it. So you can't use borrowed money
Nope.
to
They check
pay
everything.
for the house, down payment and closing costs. You cannot do that. It can be a gift from a relative, and we will be asking to paper trail that with a gift letter and proof of funds from both, you know, donor and the buyer receiving the funds. So do not deposit cash in your account ever. So
Okay.
that's to people who are, you know, not using banks and saving and saving, you know, cash and home. So be very careful. Talk to your loan officer again, and don't try to put a large deposit, cash deposit. First of all, it's going to be flagged by IRS, and second, underwriter will never be able to use these funds because you cannot paper trail cash deposits. No one knows where it came from, even though it came from you. You were working all life saving it. We're not going to be able to use it. We'll have to subtract that amount from your account.
Yep. Paper
So,
trails.
paper trails, consistency, paper trails, all of that, very, very important.
Yep. So I think last question, is this program available in different states? Nope. This is
No.
a Massachusetts exclusive. So be happy that you live in one of the best states, because I have had people in Florida, South Carolina, Virginia asking, and they are not eligible. This does not exist in their state. There is no money to help them buy a house. So leverage this. We talk strategy. Everyone wants to live for the most part in Boston. If you see that you cannot, don't let the opportunity pass because you can't live in the place you want to live. This is called your first home, not your forever home. So you can use this to buy a home so that you can save money to then buy and upgrade your life to your forever home. But get in a home with this money now. Okay? Thank you, everyone, for joining us tonight.
Have a good night, everyone.
Let this kind of do its thing and save, and then I'm gonna upload it and share that with you guys. And then I'll put together the packet of some of the questions that you guys asked. So kind of the income guideline. It's on the My Mass Home website, but I'll put it so you like a screenshot so you know what the income guidelines are. You guys asked for the interview questions for loan officers. I'm going to send that out to you as well. And then I'm trying to think of what else. I'm going to do a better job of getting the link out to everyone for next week, because it seemed like Eventbrite's a little bit wonky. So even though it's sent out multiple times, it wasn't where the link was right to the top for you guys to click on. So I'll fix that. Thank you. Have a wonderful night.
Bye, you guys.